Good morning or afternoon, everybody, wherever you're sitting today. This is Behind the Numbers, how investigations uncover risk, fraud, and hidden connections. My name is Christina Giorgio Lee, and I'm a manager of the investigations team in the Forensic and Valuation Services Group at Withum. I'm a licensed private detective within the state of New Jersey, and I've been in the investigations field for approximately 19 years, and 15 of those have been with Withum. So I want to take a second to just introduce my colleagues, John Sheehy and Lori Allen, who are principals of the Corporate Intelligence and Investigation Services Group within our forensics group.
Hey, thanks, Christy. Good morning, everybody, or afternoon. I'm very happy to be here. A little bit about myself. Again, I'm John Sheehy. I've been at Withum for about 2.5 years. Prior to being at Withum for the 25 plus years before that, I was with the FBI. I was a case agent, and later a supervisor. The first, about half my career was spent in the New York office, with the second half being spent in New Jersey. During my time as a case agent, I investigated complex financial crimes, money laundering, criminal enterprises, mafia cases, a little bit of everything, and was also a crisis negotiator. I went into leadership my last 5 years. First, I ran a squad focusing on white collar crime and fraud and healthcare fraud. And then I took over a satellite office, or I led a satellite office. And I was responsible for Monmouth and Ocean County and its 1.2 million residents. I was the lead agent. Prior to my time at the FBI, I was an attorney. I was a litigator for several years at large law firms in New York and New Jersey. And I am also a New Jersey licensed private detective.
Yeah, hi everybody. My name is Lori Allen, and I'm the new kid on the block here at Withum. I'm new to Withum, but I'm not new to investigations. Like John, I'm also a retired FBI agent and FBI supervisor. I retired after almost 26 years in the FBI, working my entire career in complex financial crimes and fraud schemes. In the early part of my FBI career, I spent that work in corporate and securities frauds, conducting investigations into insider trading, market manipulation, IPO frauds, and all kinds of corporate shenanigans. That's a legal term of art there, shenanigans. But later in my career, I specialized in investigating and then supervising healthcare matters, which is a never ending fountain of fraud. As my career progressed, I was the program manager for FBI healthcare matters in the state of New Jersey. We had a great program there in the FBI. We were rated in the top 1% of all programs in the FBI. And again, like John, prior to joining the FBI, I was a practicing attorney also. My focus was on management side employment matters and general litigation matters. I'm a veteran of the United States Air Force and Air Force Reserves, where I honed my leadership skills. I'm an adjunct professor in criminal justice at Monmouth University. I'm a certified fraud examiner, and like Chrissy and John, I'm a licensed private detective. I'm thrilled to be here to present this important topic to you today.
No, what's great is that Lori and I got to work together as friends and colleagues at the FBI, and we're getting to continue our collaboration and benefit.
So, the greatest enemy of knowledge is not ignorance, it is the illusion of knowledge, according to Stephen Hawking. So, when we talk about investigative due diligence, why does this quote resonate so much with you, John and Lori?
Well, to me, this quote kind of says it all. You don't know what you don't know.
Yeah, you're right, John. That's it. We should never have a lack of knowledge because we didn't take the time to look. So let's take a look. So I think this is an important stat from the Association of Certified Fraud Examiners. Companies lose about 5% of their annual revenue to fraud. The Association of Certified Fraud Examiners, or the ACFE, describes itself as the world's largest anti-fraud organization. They've been a leader in anti-fraud training and education. I'm proud to say that I am a certified fraud examiner, certified by the ACFE.
That's right. That's right, Lori. This quote to me is important because it really quantifies in a practical dollars and cents way why this topic is so important.
So, when we're talking about investigative due diligence, the best thing to do is start with what is it? So, it's a comprehensive investigation into the background, the reputation, and the activities of an individual, of a company, or of any other entity before a significant transaction or partnership is finalized. So, basically, this investigation is to try and uncover any hidden risks or any unclosed and undisclosed liabilities that may be out there.
That's right, Christy. The goal is to provide a complete picture of the subject's history and the present situation.
Yes, to me, this is all geared toward enabling the client to make informed decisions that can protect against potential fraud, reputational risk, and financial consequences.
So now, when we talk about investigative due diligence in a litigation context, that's involving conducting an in depth investigation to uncover any facts and assess any risks that are associated with a party or with a case.
Right. And Chrissy, well, this isn't the primary focus of our presentation today, the next 20 minutes or so. Um, Investigations do play a significant role in the litigation context, and we are going to touch on that at least briefly.
That's right, Lori. And a lot of the same tools will apply and the same focus on fact verification, although admittedly, perhaps in a different context.
So, when we talk about challenges of traditional financial reviews, the traditional financial reviews are commonplace in the business and transactional world, as many of you may know. They also do play a significant role in many types of different litigation. So, of course, and we're going to speak about this, relying only on traditional financial reviews can really be potentially bringing a host of unforeseen problems for you. John, can you tell us a little bit about them?
Sure, Chrissy. So this first slide obviously talks about some of the more obvious blind spots in traditional due diligence. You see the magnifying glass there, which I guess would be for the accountant in the old days. For me, it reminds me of the gumshoe detective work. So this slide highlights the potential problems with relying on only traditional due diligence. For example, traditional due diligence can potentially overly rely on disclosed information, and it could be human nature to not question information that seems to make sense or fits an accepted view. With the FBI, we had to constantly fight against that. You get your facts, and if you think the facts are fitting your view, you have to look again to verify it. And we do that same thing at Withum. We're constantly verifying the facts and not making assumptions. There could be hidden financial interests of relevant parties, which can be hard to detect at first or even second glance. Shell companies could be utilized to cloud various interests or relationships. There can be conflicts of loyalty and undisclosed relationships, which could affect objective decision making, especially if we're only doing a surface level review. And of course, we should be aware of potential improper sharing or use of proprietary information or conflicting or competing business interests of C suite members and their family. And this could all lead to unnecessary risk of reputation or business opportunity or even profit loss.
So, John, what I hear you saying is that there's a large list of potential ingredients that you could be missing if you don't take a thorough look at the recipe first.
So, Lori, this talk about recipes is making me hungry. So let's move on.
So, Lori, tell us a little bit about some of the tools of the investigative trade.
Sure, Chrissy, thanks. One of the things I learned during my 25 plus years in the FBI is how to build a large toolbox of investigative techniques. Some of these tools include open source databases, interviews, document reviews, diagnostics and data analysis, cyber techniques, and more typical gumshoe investigative practices like surveillance, for example. We've all seen the movies where these tools are used in different circumstances. Not every tool is necessary for every job. When we're talking about OSINT stands for Open Source Intelligence, which is a process for collecting and analyzing publicly available information from sources like websites, social media, news outlets, and public records. This information is gathered legally and openly and is an important fact finding tool for us. In the world we're talking about today, I would say that background checks is an essential tool and will often be a significant starting point. Background checks are helpful because they start filling in the puzzle pieces, so to speak. And you can have various levels of background checks. You can do anything from a basic background review to a much deeper dive. Now, what do I mean by this? Well, some obvious cursory things that might be uncovered in a basic background checks are things like criminal history, prior litigation, regulatory violations, also things like residential history, bankruptcy filings, and liens. But like anything else, you can do a more detailed background investigation. Again, not every case will call for it, but you might want to know about things like professional licenses, affiliated companies, shell companies. We also often look at family members and their companies and business relationships for potential conflicts. We can even take a dive into familial history, residential and work history, if that's relevant for the matter. Of course, no analysis would be fully complete without using social media tools to round out our investigative build out. This will lead the decision makers to have the information necessary to determine whether the individual in question is a good business, cultural, and reputational match for them. So to go back to my initial point, there are a lot of tools. We just need to determine which ones are the appropriate ones to use to build a strong foundation to complete the project at hand.
That's right. I'm Lori. Just a quick example. So, when you're talking about the potential importance of a review of family history and relationships, while in the FBI, I spent several years investigating the mafia and the families making up the mafia in New York and New Jersey. Many times, in order to fully understand what was happening, you had to understand a relationship between the parties, which were often not obvious relationships. For example, someone might be one made guy in a family might be buying concrete from someone in another family. It doesn't, and you'd be scratching your head and trying to figure out why. And then you learn that someone, because the brother of one guy previously dated the sister of another guy. So you might have a Bonanno family member doing business with the Genovese family based on a 20-year-old relationship. And it would not make sense without that knowledge of a prior relationship. So just to finish up my take on what you were saying, it reminds me of my favorite Ronald Reagan quote to trust but verify. So the next couple of slides, we're going to talk about limitations on public records because the information is only as good as the sources used. However, there have been times where even reliable databases may not reveal everything.
That's right. For example, in one of the cases I worked on not too long ago, actually, a specific company was not located in the background check of the client. And the wife had provided us information that showed that the company name and her husband's name were connected. We reran the search again through a few of our databases, and including the state of New Jersey, which is where this happened. And again, nothing came up for his name. However, the company's formation and other documents, affiliated documents, revealed that he actually was the incorporator and also the sole managing member of this company. So, why did we not find it? That's the big question. In this instance, he filed the formation documents, but it was under his initials and his last name. So, instead of John Smith, it was J. period Smith. But regardless of that, the company should come in our results when the name is searched. Um, Again, the information's only as good as the database that it's relying on, right? So we've also had some instances where a bankruptcy didn't show up in one database, but we found it in another one. And then, of course, international information that presents a whole slew of challenges due to the availability of database coverage and also laws that vary once you cross waters internationally.
Yeah, Chrissy, and I think what you said, it just highlights why it's so important to use multiple databases and resources to cover everything and to work through all the glitches that might appear in certain data sources.
And just to round out our discussion on the limitations of public records, certain privacy laws and regulations can be hurdles to obtaining information. So, for example, the first one on the list, the Right to Financial Privacy Act, this prohibits financial institutions from disclosing bank records or account information of individual customers to government agencies without consumer consent, court order, subpoena, search warrant, or other formal demand.
That's right, John. And the second bullet point there, the Graham-Leach-Bliley Act, requires financial institutions to explain their information sharing practices to their customers and to safeguard from sharing sensitive data to third parties. And while you'll find some private investigators or private detectives claim to be able to obtain this data, if they do not have the legal authority, they cannot access it from the financial institutions. So beware, dumpster diving is a thing. Once your trash leaves your home and is out at the curb, It's public.
That's right. And that last bullet, which is probably the most commonly known one, the Fair Credit Reporting Act, that's a federal law that regulates how your information is being used by various consumer reporting agencies, like the big three TransUnion, Equifax, and Experian, as well as others like banks, credit unions, and even potential employers. So, the Fair Credit Reporting Act is a law that's intended to protect consumers from wrong information being used against them, as well as to indicate any specific guidelines that have to be utilized by the reporting agencies on the credit side to collect and verify the information. So let's talk a little bit more about the potential pitfalls of incomplete due diligence searches. So, in my role as a manager of the team, I work with our junior members to ensure that their investigation is complete. And one thing that frequently can come up is a shell company owned by the subject of the inquiry or any kind of prior litigation that would involve the subject. So, in order to gather these facts, we need to locate and we need to assess the information from various jurisdictions and resources. It's time intensive work, sure, but it is necessary if we're going to gain a complete picture of what's going on. John and Lori, what are some additional pitfalls that you also see if a due diligence investigation isn't done properly?
Thanks, Christy. So this slide does lay out the some of the big ones. So with respect to undisclosed financial interests, an example might be a partner has a financial interest in a vendor or competitor that you plan to do business with. This could lead the partner to favor that vendor for personal profit to the detriment of your business. I'm basically talking about improper personal gain for business decisions. To give another example, a partner with potentially multiple businesses makes a decision like choosing a location or suppliers that's more beneficial to their other business than it is to your shared business. And the second one, with respect to conflicts of loyalty, we've been talking a little bit about this. But one thing that jumps out to me is nepotism, where the C suite or partner hires an unqualified friend or family member. Another example might be improper leverage of an undisclosed relationship, such as awarding a contract to a close friend or a romantic partner, or maybe owning a competing business, which could divide loyalties.
Yeah, and with regard to the third bullet point, abuse of information and influence, what we're talking about here is a partner or a significant firm member who uses proprietary or confidential information gained in his business with you to advance a different venture, such as his own business or even a competitor's business. Another example could be a partner who accepts valuable gifts or gratuities from a vendor, which could influence objective business decision making. We'll get into reputational issues in a slide or two here, but it goes back to the saying, you don't know what you don't know. And reputation details could impact the success of your business and your client's trust in you and your business.
So, right now, we're going to take a look at some real world examples to further illustrate everything we've been talking about.
So here's the promised reputational risk slide that Lori just talked about. Here are some obvious examples of people who have been in the news lately who can engender feelings that can negatively affect your business depending on your perspective. For example, Elon Musk, depending on where he is at that particular moment, he's either a friend of the administration or of the opposing political party. If you remember, Tesla's shares tanked at one point, and of course they're back up now. Elon is probably the most high profile, but the Coldplay Kiss Cam couple got a lot of press a couple months ago, leading to resignations and potential reputational damage. And of course, Brett Favre has a lot going on as a long suffering Jets fan. I'm not sure how I feel about this. So these are obvious examples that are in the news. Thankfully, not everyone rises to this level of notoriety, of course. What we want to make sure is that there is a method in place to ascertain potential reputational risks for individuals who might be less high profile. We accomplish this through open source intelligence tools, social media scrubs, and conventional media searches, and perhaps interviews if needed. This all goes towards that determination of understanding the background, warts and all, of someone you may want to go into business with or be connected to. And of course, it's useful in a litigation context as well.
Yeah, these next few slides are examples of real cases. We've taken out the names of the businesses as a matter of fairness, but included the information here as a teaching tool for you today. In this first slide here, a well known national bank was engaged in risky hiring practices. There were executives hiring and promoting unqualified friends. This led to an SEC investigation, all bad stuff from a bank's perspective. A scrub of relationships may have uncovered the association between the executives and the unqualified hires. It could have been allowed in this matter. It could have allowed this matter to have been addressed before it rose to the level of impacting the reputation of the bank and the SEC getting involved. This is essentially a case where the improper hiring practices undermined fairness and objective decision making. Nepotism in the workplace can lead to biased decision making, resentment among employees, and create a bad work culture. This can actively affect the company's ability to retain vital employees and create an environment for success. Without addressing this proactively through means like investigations or other methods, these can ultimately affect the bottom line of a company. Some investigative tools here that could have been used include a deeper dive background investigation to look into family relationships, social media connections, and a review to put in place more transparent hiring practices.
And this slide shows an example of undisclosed financial interests. Of course, a vital issue in any potential business transaction is that anyone would want to know about includes, are there undisclosed financial interests, including self-dealing and other financial conflicts? So, to reading the slide, in this example, an IPO is actually canceled due to undisclosed self-enrichment and financial conflicts of self-dealing. You could see there were personal loans and undisclosed self-enriching rental payments, and the result was the IPO was canceled, which is never a good thing. Again, it's essential to understand and gain reassurance that your decision makers are playing ball in an objective manner.
Yeah, and this slide goes back to knowing who you're going into business with or who you want to work with or be associated with. This example is a combination of undisclosed history and reputational risk. And you can see in this case, the reputational due diligence was essential. A professional background investigation would uncover criminal history, and other open source OSINT tools could have been utilized, such as searching newspapers, chat boards, and other online social media tools to make an accurate risk assessment. And in this example, the investment firm saved themselves from taking on a large client who was not a proper fit for their business.
So, what are some key takeaways here of what we've been talking about?
Chrissy, simply put, fraud causes very large financial losses throughout the world, requiring a need for prevention strategies and methods. When it comes to investigative techniques, we have a laundry list, or if you will, a toolbox of techniques that we can use. Very often, it starts with a background check. While traditional financial due diligence methods are also essential, it's often important to go deeper into the background and look into potential gray areas that businesses may rely on to make the best decision for them and to ensure they have a best fit possible for their culture.
That's right, Lori. And it's really a great slide. When you talk about how critical it is to make informed decisions, it goes back to wanting to know what you don't know and using that laundry list that you spoke about earlier of investigative tools to your benefit. Of course, this all leads to the all-in approach that we always think is the best and allows us to more fully understand our risks and get that comfort that we're looking for.
So, we're going to wrap up our presentation by closing out with two of my favorite quotes. One from Benjamin Franklin: "An ounce of prevention is worth a pound of cure." And of course, from Warren Buffett: "Risk comes from not knowing what you're doing." So, if it's good enough for Benjamin and for Warren, then it's good enough for me. So, John and Lori, if you had to sum up our presentation in a few words, what do you think they'd be?
Well, in just a few words, I would say facts matter. So let's learn the facts.
Yeah, I agree, John. I'd also say having a big toolbox gives you a variety of ways to learn the facts if you know where and how to look.
Fantastic. Well, that ends our presentation today. We want to thank everyone very much for attending. If you have any questions, we can take them now, or if you would like to talk with us more about what we can do for you or for your business, please feel free to reach out. All of our contact information is displayed here on this slide.
Thank you very much.
Thank you,
Thank you.
everybody.
One of the things that we love about Withum is Withum itself is a top-notch,
high-end, high performance firm. They have really, really great financial accountants, forensic accountants. They have a great cyber group, so really we're able to provide and utilize the assistance of a lot of these elements to help us provide the best value to our clients.